So welcome in. This is April 23rd, just kind of a weekly live weekly stream and kind of seasonality as well. We're going to go ahead and get started. So for our trend journal, last week we put it into a short-term downtrend. So this is just based off of a 21 or 30-day moving average. I'm using a 30-day on this specific one for the end of a trend. So we ended up in a downtrend on the 11th, and now we're in day 8 of a downtrend. The last few days we've had attempted rallies, which have been pretty strong. So when you are in a downtrend, short term, kind of like we are, what I look for is 4 days of attempted rallies. And so I'm not going to consider, I'm not a bottom picker. I'm never, ever, ever try to pick the bottom and look for the lowest price. I really want confirmation before I start getting and looking more towards longs. There are starting to be some stock setups, and we'll get to that. But as of right now, the indices are still below short-term moving averages and a little mid-term as well. So I'm still a little cautious. So we look for 4 days minimum to consider it back into an uptrend. So what does it need for me to be more bullish again? Seasonality wise, we are getting towards the strongest time of the year in an election year specifically. We have not had any election years close red since 1954 between May and December. So if you buy in May and you sell in December from any election year between 1954 and now, there's only 2 years where you would not have profited. So that's kind of a little key to where we are starting to get to more of a bullish time of the year. May tends to be a little choppier, and then it gets stronger, especially towards October, November, December. But I'm not really looking too far into that now. So short term, what we need is we need 4 days. 1, 2, 3, 4. So the earliest would be Thursday. This low needs to hold. So Monday's low would have to hold. So the low of the first rally attempt. So this is rally attempt 1, rally attempt day 2. And then on the 4th day, that would be this Thursday or later, we need to have a up day above 1% on higher than average volume. And so notice the volume today and yesterday, we actually have declining volume. And so that's just something I keep note of. When we do kind of confirm that we want to be back into more of a bullish scenario, we do want to see the day that we confirm it, say we break up, and ideally we would need to be back above minimum the 10-day moving average, preferably the 21-day moving average. And so we would need to be back above the 10 or 21 day with higher volume, and then I would say, okay, now we're looking back into our uptrend. That would change from a negative into a positive trend. Very similar to this whole move right here, where we see downtrend, 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 and then right here we had our low, 1, 2, 3, and then day 4 we gapped up, held above our 10-day moving average, and continued higher. And so that's kind of what I'm looking for over the next few weeks to days. Ideally, a couple days. Then you can also, I'm noting on this 200-day moving average, right here, we're bouncing, and we are, NQ actually is very close to it now. So kind of interesting that QQQ isn't, but NQ kind of dipped below a little bit on this one, but NQ is right at its 200-day moving average. Very, very close to it, but it's still below its 10-day, still below its 21-day, still below its 50-day moving average. So those are key levels that I need to see it get back above. On the NASDAQ specifically, take off these things. There are some levels that I'm looking at. This morning I was looking at a couple fair value gaps, which got completely invalidated. And so now there is one small fair value gap right here, right at this candle on the 4-hour. And then another larger fair value gap, which is also a daily fair value gap right here. and so that would be from this day right here, from the 15th. So those are two levels that I'm watching over the next couple days. If we happen to get to this fair value gap here, then this week, which we should, this fair value gap, then we could see and start retracing. Then that would be a good little level to form a fair value gap on the weekly as well. Because the weekly would close right here, it would form a very small fair value gap on this weekly chart. And that's what I'm looking for. Is this weekly candle gonna have a high wick, or is it gonna involve? So we had the last weekly candle, let's just hide all. We had a 5% weekly candle on the NASDAQ. This is the largest weekly candle we've had in a long time. So if you just scroll just through these large candles, 3%, 2%, 3%, this one right here, 5.5%. We bullishly engulfed it the next. This candle specifically did not break any sort of structure. This candle broke this level, broke this level, broke this level. So then I'm just kind of looking through some of these. This one right here, it didn't really break structure, but it was a large candle, continued down to the downside. Again, this was a almost just as large candle, but it had a 1 week of consolidation, then continued to the downside. So what I'm looking for is either this week to have like a large wick similar to this one, and then the next few weeks to go sideways like this on the weekly chart, and then kind of show its hand where it's going to want to go up, or it's going to need to confirm that it's going to go to the downside. So for that to happen, we would need something like this, where, let me zoom in here, you may not be able to see it perfectly. We create a fair value gap. We create a fair value gap. And in that case, we would look more to the downside. Notice here, we did not create a fair value gap. Notice here, we barely created one there, but we did create one. But we didn't get displacement below all of these lows. So those are kind of key things that I'm looking for. Is this week, I want to see whether or not we're going to create fair value gap. And that way we'll be able to tell where our flow is going to be. We are kind of inside of this range, inside of this order block here, and this also fair value gap on the daily. So those are levels that I'm watching for NAS, and kind of how I'm playing this short-term trends out. What I'm also doing on a daily basis is I am going over the orb, so I'm trading the opening range break more than anything else lately. And so I'm going over the orb every single day to say, okay, what was the opening range? What was the pre-market range? Did you have to have a limit order? Not are you able to, but did you have to have a limit order, or could you have set a manual order? How big the stop loss was? How far in sense of standard deviations did that move go? And if you don't know what standard deviations is, that is just the amount of however wide the range is. So if you have a 70-point range and you go 70 points, that's one standard deviation. If you go 140 points, that's 2 standard deviations, so on and so forth. How many points did it hit at the peak? How many points did it hit if you held it until the end of the day? Was there news? Was there a retest? And then same thing if there's a second entry, which sometimes there are. And then when I'm taking notes on all of these, what are the common factors that are happening through and through in each and every single day? Right now I'm noticing the average range is about 70 points for the opening range. Your sweet spot is right between 40 and 70 is what I'm finding out. Anything higher, 100 especially, or higher, you're not seeing a move for the day. If you have like this one, 80 points, opening range, you get a choppy day. And this is how you can tell if the day is going to be choppy or not before it really gets going. You can kind of tell yourself, okay, if we have a larger opening range, we're more likely going to be choppy. If we have a smaller opening range, we're more likely going to have a good range day, or at least some sort of move outside of that range. 125-point opening range, no trade for the day. Weirdly, the 65-point opening range, no trade for the day. But look at the pre-market range, very, very, very large, huge pre-market range. 100-point opening range, no trade for the day. 80-point opening range, 420-point pre-market range. Just very large ranges. Again, no trade. So those are how you're able to tell, really, is this going to be a choppy day or is it going to be a trend day? And that's for day trade specifically. This is really going to help you understand how the market moves and protect your profits instead of trying to force trades on a range day of something where, let's just go to a decent one. I think last Monday was a good one. Just like this. These days right here. Last Tuesday and Wednesday really. But mainly Tuesday. This is how you're going to be able to protect yourself from this sort of bullshit. We're just going to remove all the drawings and hide the indicators. See, this is your first 15-minute candle. Where's 6:15? It's just right here. It's inside its range. It's got a huge pre-market range, and then it just kind of does nothing all day. And so these are ways you're going to be able to tell, and we can just say beforehand, before the market even opens or gets an hour into the day, we can say, okay, is it going to be choppy or is it going to have a good trend? Your average, and then like your average range for standard deviations. When are you going to cut? Well, if you have a average standard deviation of two and a half standard deviations, then, or 2.7 standard deviations, then if it's going to 3 standard deviations already, you know this is outside your average move, so you might be more likely to cut your profits. So this is how I'm really looking to see how far the market's going to move versus, is it better to hold one runner till the end of the day? And that's where in our trend journal, we really can see that in the beginning of trends, days 1, 2, 3, 4, you're able to hold them till the end of the day. Trend day 1, trend day 1, trend day 2, 3, 4. And so like these trend days, you're able to hold them till the end of the day because they're in early market trends. Once you get later in the trends, like this was day 50, day 70 or whatever, or day 40 or whatever. Notice how choppy this shit tends to get. So it's a lot harder to know for sure, okay, is it gonna close at the highs or is it just gonna chop around and pull back and close at the midpoint? And then another thing that I'm noticing is your second entry. So like there's 2 days here specifically, this day and yesterday. So the 12th, the 11th, and the 22nd. Weirdly, they were exactly 11 days apart. But you had an orb to the downside on the beginning of the day, and then it reversed and ended up breaking that orb to the upside later on that day. And when it does things like that, that second orb entry tends to be the best entry. Those tend to have the best risk reward and they move the most in case sense of standard deviations. Sorry, I missed the average amount to spot a range day or trend day. For the opening range, so your first 15-minute candle, if it's between 40 to 75 points roughly, you're looking for a trend day. If it's over 100 points, you're probably going to range for the day. If your first 15-minute candle, and I'll go over that next on how to exactly set up this orb. But your second entry tends to be better. You got 4.5 standard deviations, 5.5 standard deviations on average for your second entry. Your first entry on average is 2.5 standard deviations. So it just kind of shows, and this is going to give us a better chance and better idea of how we're going to be able to dial this in super, super nice. So what about the first 15-minute candle? What does this mean? What is the orb? And how are we getting this? So I'm going to reset my scale. In order to find the orb, all that stands for is opening range break. So opening range would be what you're looking for. That's the first 15-minute candle. So today, we're going to go to NASDAQ. We're going to go right to our 9:30, 6:30 my time, opening range candle. So now, once we get that opening range candle, so we have, it now is 9:45. The first 15 minutes, you don't do anything the first 15 minutes. Absolutely nothing. You just sit there and wait. You wait and watch. Once that first 15-minute candle closes, you go down to a 5-minute chart. And you can watch a 5-minute chart throughout the first 15-minute candle if you want. But from my experience, if you're not super disciplined and you do have troubles not just pressing buttons, because I know some people do, you might get a little antsy and try to get in early on the 5-minute, which I do not recommend. So wait till the first 15-minute candle close. After that, you're going to take the first 15-minute candle and you're going to just put a range, a high and a low, and then set alerts. Boom, boom, set an alert here. Once that alert goes off, or just watch it, doesn't matter, you're going to enter at the close of the candle that breaks out above that 15-minute range. Boom, it goes up, that's fine. You wait, you can either enter here. In my opinion and in my experience, I think it's best to wait till that candle closes. So boom, you wait, you come up, you have a great move. This was news, and you wait till this candle closes. Boom, there's your entry. Stop loss at the low of that candle. We're gonna be here. Stop loss at the low of this candle. On this case, it's 40 points, so you probably want to play a micro instead of a mini. Another way to do this is stop loss at the half standard deviation, which just so happened they were the exact same thing. And that's half standard deviation of the range. So when you're done, when you get a confirmation of whatever direction you're going, you set your first fib at the bottom. Well, in this case, it was going up, so we set our first fib at the bottom and our second fib at the top. Boom, that gives us our fibs and our standard deviations for targets. Your first target always 1 standard deviation. That's a bare minimum. You really don't look to you might trim like 1, but you want to really get a move past that. Very rarely do I see it actually stop at 1 standard deviation. Usually it goes to 2 or more. So entry is the close of the first 5-minute candle that breaks the 15-minute range. Correct. So this is our range. This candle specifically broke that range. That is your first entry. If you did not get in on that entry, or it was a little too large of a stop loss, you can enter, and you don't always get this, and that's why this is a little more, it doesn't work as well sometimes, on the candle that retests the high of the range. So this is our range right here. See this candle on the 5-minute, it came down, wicked right at the orb, and then came right back up. The close of this candle, that's a second entry. So this is an alternate entry if you missed the first one. So you go here, and again, stop loss below the candle that you enter on. This one would have had a much better stop loss personally, but you don't always get this entry. So this one happened to be a 17.25 point stop loss. For a mini contract, if you're trading the NQ minis, it's a little over $300. If it's a 50K account, that's a little under 1%. That's fairly decent. In a 50K account, most places have a $1,000 drawdown limit. That's 33% of your drawdown limit. So just know what you're trading and what your drawdown limits, what your own risk management is for whether you're going to trade micros or minis. That's going to be on the individual trader. So, and then that's our second entry. So entry 1, exit the end of this first candle. Entry 2, the close of the retest candle. And I'm always waiting for the candle to close. And that's really just to make sure that it's not going to give some crazy fuckery. Because yesterday actually was a pretty good example. Here's the orb. It actually ended up closing. Here's the orb. It closed outside the range, and then within the next couple minutes, it pulled right back. So this one would have gotten stopped out. That's perfectly fine. And then it broke the orb to the downside, and you would have been able to run that. And then again, it ended up breaking it to the upside. But that's one reason why it doesn't always work. It usually works. But you have to have proper risk management and understand that if it does take me out, I'm not going to take a big loss. Do not take a big loss because you're always going to get more entries. This happens almost every single day that we can trade this. So we're going to take our standard deviation again. And generally, where you see the most consolidation or pullback is around the 3 standard deviation, 2.5 to 3 standard deviation. Notice we hit this 2.5, and boom, we're not even at the 3 standard deviation yet. Yesterday, same thing. Here's your orb. We actually can show both sides because it went both sides. And this kind of confirms what I mentioned where sometimes it is not, when it goes to opposite way, it sometimes will have a bigger move. This is our 730. Well, so this went 2.5 standard deviations from the first move here. So this is your range, right there to right there. You enter on this candle here. This candle closed right below the low of this. Super simple, super easy. You just notice that. Stop loss right above that candle high. That makes the easiest, lowest risk stop loss. And then you're looking for 2 to 3 standard deviations. That's really key. You're looking 2 to 3 standard deviations usually. And this goes to 2.5 standard deviations and then pulls back. So then, if it comes back to the upside and breaks out from the orb to the upside, you can trade that again. So boom, we went to the upside, and now we went a little over 3 standard deviations to the upside. So that move to the upside actually was a little larger than the move to the downside. Not by much, but just by a little bit. And so if you would have traded this again, you would have had 2 different trades. You could have entered here, or there's the retest on that next candle. So either close is perfectly fine. Boom, stop loss. If you get in on the exit on the retest, there's this. Or if you want to be conservative, just the stop loss right below this specific candle. And then again, you're looking for that minimum 2, then ideally 2 to 3 standard deviation. Notice how you get some sort of bull flag or consolidation right around that 1.5, but usually on a good trend day, we see it move and continue. Notice our ORB Journal, we don't see, there's one time where we see a move that had a 1 standard deviation move, and then the next entry was an 11 standard deviation move. And then other than that, we have seen no day where we only have a 1 standard deviation move. And that's also probably just because we are early in a trend. So knowing what part of a trend we are in. So we haven't actually seen just a 1 standard deviation move. So I'm really looking for that 2 to 3 standard deviations. Anything after that is you're just loving it. You're just happy. And usually like what I'll do is I'll just like leave a runner, and depending on the day, you could leave a runner and just do trailing stop losses. I'll just kind of read order flow. And if it's respecting bullish fair value gaps, I'll continue to hold it. If it's disrespecting bullish fair value gaps and starting to displace to the downside, then I'm more likely to get out. So I'm getting in, and then after this 2 to 3 standard deviations, that's where I'm really just starting to just read tape. And this is something, again, that we do every single day. If you want to if you want to do this with me live, we do this every single day on stream in Playbit, the early bird stock stream. And I'm constantly on there. This morning, I'm not calling trades. Everybody's hitting it though. I'm not necessarily saying I'm getting in here, I'm getting out here, but I'm helping trying to help educate and help you guys and the team make their own trades. Hey, we're breaking out of the orb right now. Watch for this 5 minute candle close. Hey, we are retesting this orb right now. Watch for a bounce. Those are the keys that I'm giving during on live stream in the morning, every morning, to try to help everybody really get this down for themselves instead of just, hey, I'm going long right here, follow me. And everybody's been fucking killing it with it. Brundon is just trading QQQ instead of NAS, and he's killing it. And he's trading options instead of futures. You can trade options with it, futures, it doesn't matter. I'm personally trading futures. You can trade options. So there's definitely a huge opportunity for everybody in this trade. You can trade it for Nvidia, you can trade it for Tesla. Doesn't matter the asset. But understanding this is going to for sure help in a sense of the long term, when to buy and when to sell, especially for day trading. If it's not outside the orb for the day, guess what? I'm not trading it. People will be like, oh, how does this look? Is it out inside or outside the orb? Oh, it's inside? Nope. Don't bother with it today. Wait till tomorrow. And that's kind of a huge key. It's like, okay, I don't care. You get to the point where you just don't care because it's not inside, not within your parameters. I'm trying to find another one that was just a good day where it just chopped around right here. Just chopped. Boom, 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 boom. It broke out one time. And usually what I'm looking for is like, I don't really like to trade after lunch anyway. So if it's not broken by lunchtime, then I'm probably just not going to trade that day. And like, you're not, just because if we day trade, we don't have to trade every day. We just, we have to know which days to trade and which days not to trade. Look at any of these you could have hit with the orb. This is the other one where I mentioned it went down and then went up the higher point. And again, it's on a news day. So this is a huge strategy I've been using, and I've been dialing in, and I really want to help people really learn this and dial this in for themselves as well. Been helping me out, especially been trying to perfect the orb lately, and shit is helping hella. I agree. It's absolutely phenomenal. I'm happy that it helps. And so that's the orb. That's what I'm doing. I'm gonna get a full video on it, breakdown of how we're gonna do everything, um, and that way we can just get one video of just that. I have not personally, but I will. I can. Have you been using the orb for a long time now, haven't you? Yes. I actually originally created a orb I originally created an orb step-by-step strategy in 2022. So this is something I've been working on for 2 years now. I originally created just a very basic step-by-step strategy, and throughout the years, I've really dialed it in my own way. And so most people don't use this candle close as their stop loss. They might use, from the original way I learned the orb, your stop loss is this 50% range. And that's perfectly fine. And then you're looking for a 1-to-1 because you're just looking to get to that 2 standard deviation. If you get to the 2 standard deviation and you're in right at your orb and get a 50% stop loss, no, it's a 1 standard deviation. That's a 2-to-1 every single time. 1 standard deviation, half standard deviation stop loss, that's a 2-to-1. Fixed risk reward, I can guarantee that's going to be profitable. Right there. Bare minimum, that's a base. That's the base strategy that I learned personally when I first started this. As I have dialed it in and worked more and more really working for it, and that's where this journals came in handy. We're able to extend our targets to a 2 to 3 standard deviation. And even if you were to continue to use this half standard deviation as your stop loss, you're still getting 4 to 5 R per trade per day. And so this is where I've personally dialed this in and really, oh, can on news days, maybe you're going to have to use a limit order. Well, would that have worked today? Kind of did a little bit, came back, and then boom. It would have worked perfectly fine. It would have tagged you in here. And what a limit order is a buy stop or a sell stop. And that would be, we'll get rid of these. You know there's news coming right at 9:45. You know there's news 15 minutes in the market open. You set a buy stop right here and a sell stop right here. As it passes your level, it automatically tags you in and you're in the trade. You set your stop loss right here at the low of that at the low of the candle, and then you just go. Have you identified a win rate per the orb? I have I have not statistically got one, but from what I have seen, it is very, very high. And again, I will get that for you over the next few days. I will easily get that for you. And I mean, we can go over it real quick right here. We can go over the last 10 days. And it appears high. It's fucking incredibly high. And a lot of times you'll see these false moves beforehand. Boom, you have an arm, there's your range. Failed move to the upside. So if you would have entered on that, that's why we wait for the 5 minute candle close. Boom, we broke the orb, but we didn't close the 5 minute candle. All right, we're still waiting, still waiting, still waiting. Boom, broke it to the downside. All right, now we're going short. Dude, yeah, casino baby. I was actually about to hit you up and fucking see if you wanted to work with me on backtesting this because I know you're fucking super good with that. And there is I'll post this research paper. There is actually a research paper that I think he's the owner of Bull Bear Trades. What's his fucking name? Um, Aziz something. Andrew. He wrote a book. I read his book. I read like 3 of his fucking books. And this strategy was actually in his book. Not this specific way, but I'm looking on my phone real quick. Andrew Aziz. That's his name. And he actually wrote a research paper about this specific strategy and how much more profitable it is than just buying and holding the S&P 500. And in the strategy, he backtests over multiple assets. So I'll for sure send you that casino baby as well. And yeah, it's absolutely mechanical. Yeah, I've posted it like 3 or 4 times. But yeah, over the last 2 weeks, I think it's had a 80% win rate, 90% win rate. Like it's fucking stupid high. And the only time that it wouldn't is with this shit right here. When it's just choppy as fuck. And by then, you're like, it fails one time, it fails 2 times, you're just like, all right, I'm done with this shit. I'm out. It's just a no trade day. What was the name of the book again? So the book that I read of his, there's Advanced Techniques in Day Trading, How to Day Trade for a Living, and what was his third one that I read? It was a psychology one. Um, where is it? I'm looking on my phone. Hold on. I have too many books. Andrew Aziz. How to Day Trade for a Living, Advanced Techniques in Day Trading, and Mastering Trading Psychology. Those are the 3 that I read from him. Andrew Aziz. I'm gonna type this for you guys. And I thought his books were mediocre. Not gonna lie, his books were okay. They weren't phenomenal. I've definitely read a lot more, but they were pretty decent. Um, but his research paper is not in any of this. I'm just gonna have to post it. That's fucking incredible. That's super awesome. And so yeah, like these days are a pain in the ass. And if you look on these days though, most of the time, like if we take our 15-minute orb, they break out on a 5 minute, but you never actually have a 15-minute candle close. So like this one's shit because the 15 minute is so small. Like this is the orb right here. It's 45 points, but it's just all within this whole pre-market range. And so like it broke in and out of the orb. Yeah, that's the one. Yeah, or base. That's the base strategy of the original one, and then the relative volume, which I haven't figured out what they mean by relative volume. I don't use that. Because with the relative volume, I haven't had a chance to. It's like, how do you know what the volume is compared to the last, like, how many days? And their in their research paper, it doesn't specify it's relative to how many days. Yeah, usually there's a consolidation day following a huge move. I agree. And so that's another little key for this too. Relative volume plus three and above is bullish. Yeah. That's 300% though, relative volume. How often are you going to get 300% relative volume? Very, very little. And so like just even if we just take this shit off, just leave our volume. Look at this volume compared to this previous day. It's much lower, but it would have worked great. Same with here. The relative volume on the first 15-minute candle is actually way higher, but the rest of the day is fairly low. Same with actually this one's very very perfect. Relative volume almost all day is like, and how long are you looking for that relative volume? Are you looking at it for the first until it breaks? Yeah, and they do a buy and hold till end of day strategy. And so that's the base model with that with the research paper, and I've really dialed it in to make it my own instead of just theirs. Look at the relative volume on this. This was great, but the relative volume on the way up was very low, and you would have missed a fucking 130 point move. And then I'm taking note too, is there any, like, so in that research paper, they only go long if the first 15-minute candle closes bullish, closes green. They only go short if the first 15-minute candle closes negative. Well, how often does that happen? And that's why I'm actually like writing down what's the first right here, the direction of the first 15-minute candle, neutral, up or down. And so I'm taking note, does that matter? How much does that matter? So I'm keeping all these metrics to it. Like this one, it closed green. We were up for the day. That worked out well. So yeah, we'll keep this up. We'll keep using it. We'll keep doing it. I mean, it doesn't just not work. It always works, and it works for, and its key is like it's time. I've been trying to find one for a an Asia session, London session, but it just doesn't work. We range too much. It just doesn't work. And so another huge key is the time. It's the first 15-minute candles of New York session open. And so it's very similar like where Casper is like, "Oh, you want to use time along with price. This is time and price as well." You can use relative volume as a trend or not intraday. So if it ranged 2.5 or to 3, consider it a trend day. If it drops, that's how some use it. Yeah. Yeah, I'm trying to find an orb for UJ. But again, it's just I have not found a good one. I don't think I think it's just too choppy. You might have to even use a 30 or 45-minute one or a 30-minute to an hour but UJ's so wiki and so wild. So I think it's just one of those things where it's just best used New York session. UJ looks crazy. But if anybody wants this specifically, I can post this link. I can share it and post this link, and to where everybody can watch and look at and check out these metrics themselves as well. And so that's one. And then, yeah. Yeah, no special sessions in UJ. They just kind of move whenever. I agree. And then also, what I did over the weekend, this is another thing that I've been working on, is I build a habit tracker. So if anybody wants this as well, I'm trying to find a way to just publish it as a template so you can adjust it to your own. And what it is pretty advanced. I had to watch a YouTube video to make it, honestly. You got your list of habits. You can create them to whatever you want. That have those habits you can do for every month. You have a month to month already made section. Boom. A plus one means you've done it. A minus one means you haven't. And it automatically keeps track of how many times you did that habit, how many times you didn't do that habit. Diet today is good, so I'll just leave that. And so that's something and then I also have a dashboard where you can go through and see how many times you've done it, each habit throughout each month. And so it keeps a percentage based off of how many times, based off of all of that. And then you have calculations for how often you do your habit as well. So training, I'm sure everybody knows that training, you really have to be the best version of yourself. And so you have to be dial in your discipline. You have to get down your habits and get down your routines. And so this is one thing I'm keeping track of just to make sure that everything is set. And I'm doing everything I need to do that. Did you take stats in college? I didn't go to college. I dropped out of college. I went to 2 years of college. I did college my senior year of high school, and then I did 1 year of college after high school to become an EMT. Dropped out and haven't gone to college or any sort of schooling since. Did you take what a plug? I started using my own Discord to keep on top of fitness and training. Yes, use your own Discord um, for journaling trades, journaling everything really, journaling your fitness, journaling. I have a section for a channel for jujitsu, channel for stocks, a channel for mindset, and a channel for like books, shit like that in my own Discord. So I definitely agree. Make your own Discord to really show to like be able to keep track of things on your own too. Nice, you roll with your passion. Yeah, I love trading. I love looking at this. I am very statistical with my trading, and I love helping people. Really. That's why I was gonna originally become an EMT, but them fuckers are assholes, kind of. So that's all I have for today. If you guys have any more questions, let me know. This was a super fun stream. Love the interaction. Love going over all of this with you guys. Feel free if you have any questions, DM me, at me in chat, whatever's clever. Just get a hold of me. Let me know what your question is, and if I don't know it, I'll figure it out and I will let you know. Again, we are going to be live tomorrow morning. We are live every single day, Monday through Friday. I usually start about 9:15, 9 o'clock, and then we'll run this orb again. Where will you post? I will post this. I will post this stream plus that research paper and the recording session under Hunter's recordings, and that'll just be a YouTube link. Can you please share the books? Which ones? Yeah, I mean, I got a ton of books. If you need some books to read about trading, the orb study. Yeah, yeah, yeah. Yeah, that's not a book, that's just a research paper. I'll post that up too. Related to this lesson. Yeah, that's just a research paper. I'll put that up on the I'll put that up on the in the Hunter's recordings. We need a Hunter education section. Yeah, I love it. All right, guys, I appreciate you all. Thank you so much for joining. We'll be back next week, and I'll catch you guys later.